Welcome to today's Daily Report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday, the 27th of May. We've got this continuation of a risk rally in equities, although there are some signs that it's not necessarily as strong as it was, because you're seeing a little bit of questionable moves in treasury yields, for example, and also Forex. Starting off with equities, we've still got these European markets pulling higher. US markets, the S&P 500 closed again at a decent breakout level. It was pretty strong yesterday, but it fell back into the close, which was a little bit concerning. You do have that futures have picked up again today. So that rally is still on track to an extent, but you do also have treasury yields, which have sort of been edging a little bit lower. You've got moves on the dollar, where dollar index has been sort of looking to recover as well, although that move has sort of dissipated slightly as the session has gone on. Euro is actually trading higher against the dollar now, and the risk currencies are still there. But it'll be interesting to see if this breakout can continue to run without any sort of corrective move back to the breakout support. 29.55 is the basis of the breakout support on the S&P 500, for example. Yeah, we've still got this breakout intact, and as you can see through the European markets, still pretty strong, isn't it? But will it start to dissipate towards the back end of this week? Because you do have these relations between the US and China, which are supposedly, well, potentially going to escalate at the end of this week. The US is set to announce some sort of countermeasure, some sort of measures of sanctions in response to China instigating security legislation in Hong Kong, and how the US responds to that will be interesting, because obviously the relations between US and China is not always that great. Now, in terms of what we've got on today, well, we've had Christine Lagarde, the ECB president, speaking, and she's suggested that the contraction is somewhere between the medium and severe scenarios, so maybe better than had been anticipated. That's helped to support the euro, I think, a little bit. Primary objective is price stability, so looking out for how inflation tracks there. Obviously, we've got inflation data at the back end of this week, so that obviously focuses on that for Christine Lagarde and the ECB. Now, in terms of data points today, we've got the Richmond Fed at 3 o'clock. Expected actually to improve to 40. Now, let me just quickly show you that on a chart where that sits. Basically, these regional Fed servers have ticked higher in May, and back to 40 is pretty much in keeping. This is the blue line here on Richmond. Is pretty much in keeping with how those other regional Fed surveys have gone. So no massive surprise in that data is in the expectation. We've also got the Fed Beige Book at 7 o'clock. That lays out the Fed's expectations of the economy and how it's tracking, and is always a good guide as to where the Fed's sitting in terms of its outlook for the economy. Now, in terms of my charts today, we're continuing to play the theme of risk appetite, risk on, with the Aussie versus the US dollar. Now, Aussie versus US dollar has been rising and breaking out in the last couple of sessions. The latest breakout, which runs along this uptrend, the latest breakout above the resistance at 66.15 has now come for a direct challenge of 66.85, that key March high, which also coincides with 76.4% fib at 66.70 area. Now, testing that as we speak, pretty much. And the momentum indicators, I think, continue to suggest that buying into weakness on this Aussie dollar. You do tend to get these little upside breaks, but then little corrective slips back. Upside breaks, corrective slips back, just underneath the breakout area tends to be the retreat point. So you're looking at this breakout here of 65.70 up to 66.15. And I think that's a pretty decent entry zone now for long positions, especially considering this resistance overhead of the fib level and the March high. So we could start to see this market just sort of consolidating a little bit. And if you do see an unwinding corrective slip, I think that would be an excellent buying opportunity within this uptrend again, because I think you're going to continue to see Aussie performing well as the risk rally continues. And that is certainly against the yen. that would be a play, but also against the dollar in this case. So let's have a quick look at the hourly chart. Again, higher lows, higher highs, breakout points becoming supportive, and yeah, you can see that through the positive configuration on momentum with the hourly RSI holding above 50, MACD's ready to turn higher again. So you got the nice breakout support 66.15 to 66.30 at the moment, but we're probably looking for a little bit of a corrective slip back in order to give us an opportunity to go long again. And you may well find at the back end of this week we get that if US and China do start to have a bit of a diplomatic spat again. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and you can watch our latest Trader Talks video, which we're going to be posting a new one today with top trading ideas.